Welcome back to Business Week on Arise News. I'm joined now in our studio by Chief Economist of Coronation Merchant Bank, Chinwe Egwim, and Africa Practice Director at Eurasia Group, Amaka Anku, to discuss the Central Bank's committee decision this week and some other top stories. Great to have you powerhouses in the studio, an economist and a analyst slash risk analyst, like geopolitical analyst. Chinwe, I want to come to you first, and it's good to see you. It's been a while.
Thanks.
Were you surprised at all at the 4% hike in the NPR?
The 4%, okay, yeah, so 400 basis points.
Yeah.
So do you know what? If you asked me this question last year, so as at December last year, I did feel like when they would eventually meet, it would be a modest rate hike. But when we came into 2024 and then the exchange rate dynamics came into the forefront, seeing what was happening with depreciation on both markets, so the NAFEM window and then the parallel market, I started to assume or anticipate that the rate hike would be considerably high. But even our projections did not hit that 400 basis points, but it was close to that. So was I surprised? Mildly.
Okay.
Yeah.
It's interesting because a lot of people seem to have been shocked by the hike. And I think the central bank is clearly concerned about liquidity. The system is concerned about inflation. Of course, exchange rate pass-through is a major part of that. So what impact do you think this will have in the short term on money supply and inflation and the exchange rate,
yes.
of course?
Okay, so as you said, like the pass-through effects on inflation, that's the exchange rate pass-through effect, is something that's really critical and is on the front burner of the CBN MPC's gas cooker right now. And this rate hike, what it's supposed to do or what it should do, and let me just highlight that one MPC meeting is not sufficient for us to get the desired outcome. But what it should do is it should narrow that gap that we see with the real interest rate. Okay. And how do we even calculate this? That's deducting inflation from the MPR. And I believe that calculation now should be about minus 7.1%.
Yeah. So we're still in negative territory.
We're still in it, but of course it's better than what it was prior to this rate hike. And, if you talk to economists and analysts who do projections, like we do projections, we are anticipating upticks in inflation rates, right? So we're actually seeing an upward trajectory, and then it will peak at some point before declining. And if that is the case, that inflation is still going to rise, then that gap is likely to widen.
So the next rate hike may not be a 4% hike, but it would be
well, I would assume that there could be another rate hike, and it wouldn't be as steep as 400 basis
Interesting.
points.
You know, Amaka, when, of course, in economic parlance and speak, for a lot of Nigerians, when we think about the NPR, the actual connection with day-to-day life in Nigeria in terms of what this means for prices of goods, how you live, work, and your cost of living. Can you help us make sense of how businesses and other operators might feel the pinch of this recent hike? Because the NPR is a reference point for other types of interest rates, like your borrowing rate with the banks, for instance.
Yeah. So you started by saying, was she surprised? I was surprised.
Okay.
And I think that was the intention. They wanted to sort of have a positive surprise because a lot of Chinwe's clients and my clients too, foreign portfolio investors, want to see positive real interest rates for them to make money on like, government debt. I think for the average Nigerian, though, what this means is that your borrowing cost is higher, and most Nigerians are probably not going to borrow anyway at 30%, or however, 35% will probably be now. But the businesses, small businesses that are, maybe trying to produce or export and need to borrow, it will impact them, which means that, things might be more expensive, or some businesses might not be able to grow. Right? And so that's the concern, that this might actually be a hit to growth.
Yeah.
But it's a trade-off, right? Inflation, you runaway inflation isn't good for growth either in the long term. So.
Indeed. And in fact, we did a poll recently. I wondered whether we can get it on screen. It was a social media poll where we asked people where they were feeling the pinch of inflation right now, and you can see their food prices coming at 7%, followed by fuel and transportation prices at 17%, non-edible consumer goods at 3%, services, etc., at 3%. I mean, this shouldn't come as a surprise to a lot of us, but if we look at the food price inflation, Chinwe, it's staggering. 35% was the last results released by the NBS.
And it's sticky, and that has really been the key driver. Of course, the core inflation is now coming in because of what we're seeing with the exchange rate pass-through. But I think let me add some additional insights around the inflation and combating it through the monetary policy. That is not sufficient. Fiscal authorities also need to step in. So that firm handshake between the fiscal authorities and the monetary policy authorities is very important. We do need fiscal tools to assist with taming this inflation. For example, like well-targeted public spending that would help with roads, that would help with infrastructure, that would help with power.
Yeah.
And all that I've just mentioned should have an impact on supply chain. And that will, by extension, have an impact on what we're seeing with food prices, so logistics. And Amaka did mention businesses will struggle to expand or grow. One of the greatest costs to businesses is power right now.
So operating costs.
Operating costs. So I think it's important that the fiscal authorities also step in effectively so that efforts from the CBN and the MPC would pull down this rising inflation.
And I think that's an important point, because some people might think the CBN's moves are a silver bullet, but we know it's not. So tell us a bit more about the operating environment in Nigeria and what that perception is, especially from foreign investors.
So let me just add to what she just said, because I think she summarized very clearly what some of the drivers are, except for security. So I just want to add security. That's been a big factor for food prices, because of course there are lots of farmers who haven't been able to go to their farms, and I think hopefully that's getting better. We'll maybe hear more about what the government is doing about security. But look, I think here, when you say what is the long-term solution, and I love to talk about this, long-term solution is productivity and exports, right? Like, we actually need to grow our foreign exchange earnings. And it's linked to what Chinwe is saying, right? Like, you need a more competitive environment for businesses to flourish. It's a long-term issue. We're not going to get reliable power overnight. It's a long-term issue. We're not going to get, great infrastructure overnight. We don't even have the funding, the money, to fund all of what we need. But what we can do, I think, what we need to be doing better is articulate, and when I say me, I mean the government, we in Nigeria. What I would like to see the leadership do better is articulate a clear plan for how we get there. Because then that will help drive FDI, which will then help give us the funding we need to build roads and help the power and help companies grow.
And that's a good
ultimately
point.
That will help Nigeria appreciate.
Amaka, good point. Chinwe, one of the things we often discuss is the fact that in terms of the monetary policy trajectory and strategy, I mean, most economists and Nigerians and observers and industry players have an idea of where the central bank is going, what the central bank is trying to do. But on the government side, on the fiscal side, that handshake, like you mentioned, it does need a bit more fine-tuning in terms of clarity around the picture of where we're heading. Because from a revenue perspective, we're still focused on short-term boosting our oil revenues, and that's a sound thing to do. But in terms of the medium to long-term strategy for boosting productivity and non-oil revenues, which is a big area, what do you think really is the plan?
Okay, well, based on my interactions or based on my based on what is in the public domain, I do believe that they're taking strategic steps towards, making things with regards to the business environment conducive as best as they can, right? Because this is really a season of economic hardship, and they do recognize that. And in as much as that is the case, they're also trying to create, maybe from a tax perspective, they're trying to see how they can create incentives that could support business activity or economic activities that would now boost non-oil economic growth, which by extension should support with non-oil exports, and of course revenue that will come out of that. when we think about fiscal and the revenue that could come out of the fiscal side, excluding oil revenue, you're thinking of company income taxes, you're thinking of VAT, excise duties as well. So we can see that steps are being taken, but of course there's still significant room for improvement. But I just want to make it clear that the season, the economic cycle that we're in right now
is belt tightening.
Yes, exactly.
Yeah. So there was another part of the MPC outcomes that I wanted to talk about, which is the increase in the cash reserve ratio of banks from 32.75 to 45%, and also the asymmetric corridor changes. What are your thoughts on how the financial services industry might receive this, or has received it, because it's already happened?
Yeah, it's happened. On Thursday, there actually was a dialogue with between investors and the CBN governor, and this was highlighted in that dialogue. And something that did come out of that, even though most of us did know that, is that the effective CRR was really at about 40%
already.
Yes. And some banks were even hitting as high as 45% or even more than 45%. So I think my view on this is that it's more like a streamlining, because the governor did mention that for banks that have exceeded the 40%, that refunds are going to happen for them. So I think it's just more of a streamlining activity, which I think is laudable.
Yeah, Amaka, any thoughts on that?
Yeah, so the asymmetric corridor, so they extended, so basically when you set your MPR, your benchmark interest rates, there's something called a corridor, which sort of says how high above the rates or how low below the rates you might be willing to go. And they moved it from, I think, -300 to -700. And it didn't get a big reaction locally from the people, but it got a big reaction from foreign portfolio investors, my clients, because they were concerned that it undermined the headline 4% hike. Because if you hike 4%, but you say you're willing to go down potentially by 7%, then it's like, you haven't really changed anything. But on Thursday, the central bank governor did clarify. I think the sense I got from his response on it was that maybe that was a compromise to get some people on the MPC comfortable with the 400 basis point hike, but they were not intending to go that low. But that was something that got a reaction.
And of course, we know, the MPC, we don't know the nature of how that decision was made, whether it was a unanimous decision or so. That's always an interesting part. I wish I could be a fly on the wall. But just one more question on this issue really is, based on what we've seen now with this latest, everybody was the long-awaited big economic move of the year. What is likely to happen for the rest of the year? Chinwe, I'll start with you.
Well, the last MPC meeting is the first of many, well, not many, the first of a series of meetings, and the next one is going to happen in March.
Yes.
That is this month. The truth is that the current posture of the MPC is that of inflation targeting, and that really is more of a monetary policy tightening stance. And what I understand right now is that the core objective really is to stabilize rates, both in the exchange rate market and also to price stability with inflation. And so, in a nutshell, I think my response to you would be that monetary policy tightening is here, at least within the first half of this year.
And you would agree with that?
I agree with that, but I just want to say, I think they were very clear and concise, and there was clear direction being given that inflation targeting is key and they're going to focus on it. And I guess I don't know if that means we'll see positive interest rates in the first half of the year. What do you think? Unless
I don't know that we would see it, but I think the gap will not be as wide. Yes. And again, as I said, the inflation forecast, we are expecting upticks, and then we would see subsequent dips. And he did disclose this as well in that dialogue, that the in-house projections by the CBN are also following that trajectory. So upticks and then...
So you're saying inflation will get above 30% before we get back down. That's
I
essentially what...
That.
Okay, I won't hold you on that.
But I think this is where, none of us, I don't envy being the policymakers, because the trade-offs are difficult. And to Chinwe's point earlier, a lot of the inflation is cost push. So you're not guaranteed to really get a big result
without a focus on the other side.
Exactly. And even with the focus on the other side, because some of the other stuff is too long term.
It's long term.
No, but
so if you have a lot of cost push, and so the risk is that you end up hitting growth.
True.
And not having a huge impact on inflation.
But that would be a whole nother conversation. Chinwe, the last word quickly, because I'm told we have to go. Please, you were going to respond to that quickly.
Yes, no, but the dips are also on the back of positive base effects, right? So it's not necessarily from a policy implementation standpoint.
Fair.
Yeah.
But I guess what this highlights overall is that there's a longer term economic recovery plan that Nigeria needs to embark on. That, you know, this is not the be all and end all. It goes beyond monetary policy moves.
Definitely.
But this is a really great discussion. I wish we had time to carry it on, but we have to move on. Thank you so much for being with us on the show. Amaka Anku of Eurasia Group and Chinwe Egwim of Coronation Merchant Bank.
Thank you for having us.
Thanks for having us.
You're welcome.